Hello everyone. Welcome to today's session. So today we are going to start chapter number 2, that is general auditing principles and auditor's responsibility. Okay. I hope you guys have gone through the chapter. You guys have read the chapter because that will really help you to understand what we are going to discuss. Okay. Now, before I deep dive into the chapter, can anyone tell me, what do you mean by audit? Like, when I say, let's say, for example, you are appointed as an auditor of a particular company, how you will do an audit? Like, simple, straightforward. Let's forget as of now, chapter number 2 for a time being. Let's focus on how you will conduct the audit. What are the things you will do in the audit from start to end? Whatever you can name it, fine. Okay. So the basic question is, let's say tomorrow I am appointing you the auditor of the company. How you are going to do the audit of that particular company? Statutory audit. Anyone? How you are going to do the audit? Yeah.
Hello, sir.
Yes.
Sir, we will communicate with the management and get to know who are the all responsible person for giving the data. We will meet with the purchase team, sales team, and then after knowing all of this information, then we will collect the samples and data. Means first we will collect the data, then we will select out of that data sample, then we will give that sample list to the respective responsible person, then they will give the sample data, then we will work on that
Okay.
in this way.
So yeah. So the first thing is you will communicate with them. You will coordinate with them. You will collect the sample data. You will test the sample data, and then you will finally issue the report. Correct?
Yes, sir.
Okay, fine. Anyone else something to add to this point? Scope of audit, audit planning, strategy. Okay, fine. What
Good
else?
evening, good evening,
Yes.
sir. Sir, firstly, before accepting the audit engagement, we will communicate to the previous auditor to know is there any objection on that.
Hmm.
Then we will accept the agreeing the terms of audit engagement, and we
Hmm.
will do the audit planning. What are the items to be? Then the team. First of all, we will check whether we are capable and capacity and time and resources to that audit. That also we will check it out. Then finally we'll agree it. Then we will plan the audit, and audit program will initiate, and accordingly we will engage the engagement partner along with the team, and we will brief about our quality policies, control policy within the firm, and the audit level also how to perform, and also we will introduce the client and those charged with the management and those charged with the teams as well. And as per the plan, we will get the audit evidence during the audit, and finally we will form the opinion based on the audit evidence is obtained, and we will release the report.
Yes, absolutely correct. We will also state responsibilities of management and auditor. Yes, Keith, very good. Like absolutely correct. Not in like anything up inappropriate. Everything is correct. Perfectly fine. So based, like, anyone else would like to add something more? Anyone? No?
We will
Okay.
also understand the entity and its environment before proceeding with the audit planning procedures.
Okay. Okay. Great. Yes.
And
Okay.
each and every stage it has the own point in itself. The planning stage, there are so many points to be checked, and the documentation is there, and also the discussion with the communicating charge with the governance, and the joint auditor, if any there is a responsibilities, and for that any person we are expertise we are drawing from opinion, and when we are using the internal audit function, and all these things are in between is there. So in each and every stages, it has a lot of essays are involved with respect to the audit. For that, we have to comply with each and every standards on audit and the ethical requirement, as well as that, legal regulatory also we have to follow, and the independence also to be followed.
Absolutely correct. Very good. Yes. At each and every step, we are required to follow essay. That is fine. Yes. And at each and every step, there is something or other thing involved. Let's say, for example, what if, like in certain scenarios, what if you forget a very important step? What if you forget something to do which is necessary? So for that, we have standards in place that tells us what are the things that you are required to do when it comes to the audit, how you are required to do when it comes to the audit, and how we are going to, tackle a particular audit. For example, you started with terms of audit and audit terms of audit. You will discuss with management, which will include fees. Yes, that's the first step. Okay, or also communicating with previous auditor. Second, once everything is fine, you'll accept the terms. If the communication is fine, if your terms are appropriate, if you can assess that you can proceed with the audit, you go to the second step, that is acceptance the term. Third, you do a background check. Okay, you do a background check of the entity, like who are the like business, who what is the KMPs, board of directors, what they are doing, is there any buyback or something. Okay, so once the terms are accepted, you start with the background check of the company. Then once the background check is done, once you gather all the information about the background of the company, you start with the laws and regulations. What laws and regulations are applicable, what provisions of laws are applicable to the entity, TDS, TCS, NBFC, whether tax audit applicable, Companies Act, what are the provisions that are applicable. You provide update to the management. Okay, this is what we think is applicable, this is how we are going to do the audit. We will keep you informed as and when we'll proceed with the audit. Okay, so you keep management updated. You check whether there is a fraud or not. Okay, you evaluate whether there is a fraud in the company or there are chances in the of fraud on the company. What is the total revenue, what is the total liabilities, cost, expenditure, you understand the trial balance of the company. Okay, what are the important areas to look based on the amounts. So these are certain things that you already look into from the point of view of when you are planning the audit. So background, one area, laws and regulations, okay, update the status, fraud, what is the total revenue or key numbers, I would say over here. Okay, then important areas. You try to understand these all things before start of the audit or before actually performing the audit. This is after the accepting the terms. Yes or no? This is something after accepting the terms that you try to do in audit.
Yes, sir.
Correct? Now, when I talk about this whole thing, this whole particular path, this is nothing but your planning of the audit. That you are doing is nothing but the planning. Straight away, it's a planning of the audit. Now, what you do in the planning, basically, all these things that we have discussed. Now, tomorrow, let's say, for example, if you forget a one particular item, if you forget something out of this, then how we can remember, how we can make sure that we are not forgetting. And over there, we have standards, and we need to understand how standards are coming into the place of, helping in our audit. For example, when I talk about terms, okay, which standard we have with respect to the terms of an audit fees? Which standard we have?
Which one, sir?
Terms of audit and fees, terms of engagement.
Is SA 210.
SA 210, absolutely. So I have SA 210 over here to guide me on the terms. What about background of the entity? Which standard guides me over there?
SA 315.
Absolutely correct. SA 315. Laws and regulations. Which standard guides me on laws and regulations?
SA 250.
SA 250. What is the standard which talks about, communicating with the management?
SA
SA
260.
260 and 265.
Yes, SA 260 plus 265.
265 is mainly for internal control matters.
Deficiencies, yeah. What about fraud?
240.
240.
240.
What about when it comes to the understanding the important areas and total revenue? What is the standard? When it talks about what is the total revenue, total cost, asset, liabilities for the company for the year, you have to understand the entity. What is that standard?
SA 315 again.
SA 315, yes, correct. Plus, I would say SA
You mean
300.
the materiality?
That is next. What will be the important areas? When I talk about important areas, what are the critical areas that you decide based on the materiality? SA 320.
320.
Yes or no? So
Yes,
there
sir.
are already standards in place to guide you on the planning path. This is nothing but what we are doing. Planning of audit. This is nothing but what we are doing is the planning of audit. Now, here the second point comes that if this is the planning of audit, is it not also a responsibility of the auditor? Let's say, for example, when I talk about SA 240 to look into the fraud, is it not also a responsibility of auditor to look into the fraud?
Yes, sir.
Okay. How many of you have actually gone through and read the annual report? How many of you?
Yes,
Okay.
gone through, but not completely.
Not complete, not perfectly fine. Absolutely fine. Not an issue. We will go through an annual report right now. We will understand what is the auditor's responsibility written in the annual report, so that you can also understand what is the auditor's responsibility. Simple. See, in audit report, we will go through a section called auditor's responsibility. Auditor's responsibility. Now, I'm going to show an public annual report. Do not focus on the name of the entity. It is just for the purpose of going through the audit report. Okay. No promotional on and thing on the name of the entity. So do not focus on the name of entity. Let's go to the part where we have financial statements and audit report. See, everything now, whatever we will do, the end result of that particular activity will be the audit report. Remember that now, from now onwards, whatever we will understand, the end outcome of that is going to impact your audit report. Do you agree with me on that?
Yes, sir.
Okay.
Yes, sir.
Agree. So now, whatever we will do, we will see the impact of all those things in the audit report, that how they are and they are reflecting in the audit report. See, generally, I'm as of now, again, I'll take up this topic and audit report back in when I will discuss in chapter number 7. Okay. But again, just focus on this thing as of now is, first of all, it's an independence audit report. This word, remember always this word is important. Okay, and where we have discussed, quick recap, where we have discussed this particular word,
SQC1 and standards on audit of financial statement.
SA 700.
very good, Geet. Yes. Anyone else where we have gone through this term?
Sir, forming an opinion on the independent auditor report is SA 700.
No. Whatever we have discussed till now. This term was discussed at two places. One was Code of Ethics, Fundamental Principles.
Yes, sir.
SQC1.
SQC1 under the ethical
Yeah.
requirement.
So over there, we saw there is a part 4A and 4B. Remember when we were going with the Code of Ethics, there were two parts, but there were total 5 parts that we discussed. Go back and see what is the part 4A, 4B. Okay.
Yes.
Over there,
Yes,
you will come to
recall.
know about independence requirement. Now, second, as you correctly said, it was SQC1 and SA220. Now, what was the requirement in SQC1, SA220? Ethical requirement plus independence. Remember
Yes, sir.
that we discussed? These are the quality and the important marks of the quality. Independent is that mark, and that's why I told you that every place we will go back and we will do a revision of this particular topic. That's why your audit reports start with the term independent. Okay, so always remember these things. Now, coming to the point where I was going to take you is one of the paragraph. Yeah, this one. Now, this paragraph is basically auditor's responsibility for the audit of a financial statement. Auditor's responsibility for an audit of a financial statement. Now, understand one thing. Whatever we have discussed in the planning, it is also your responsibility to do that. See, whatever planning steps we have discussed is the normal way to do a planning of a particular audit. And when I say a normal way of a planning of doing of a planning of the audit, that means that is your responsibility to follow that way. And if it is your responsibility, it will come everywhere, wherever your responsibility is there. For example, we will just read first of all what is written. Our objectives are to obtain reasonable assurance about whether standalone financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. This is the foremost and important point, which is coming from which
Yes,
you
yes,
have already
yes,
discussed. Huh?
yes, sir. SA 700. This paragraph section is pulled from SA 700.
No, there is one more essay on that.
SA320, materiality.
SA 240.
Geet, you are correct. What is the overall objective of the auditor?
SA 200.
Yes, SA 200. So that is the overall objective of the auditor, and that becomes your responsibility also because you are the auditor. Now it's your responsibility to obtain reasonable assurance and to provide an opinion. So your objective is your responsibility also. There is nothing difficult different in that. Your objective and your responsibility cannot be different. Here, your objective is to issue opinion in SA 200, and that when you issue an audit report, that becomes your responsibility also. That my objective was this, and this is my responsibility. So, this is coming from SA 200. Then, see, reasonable assurance is high level of assurance, but is not a guarantee that an audit conducted with assets will always detect a material misstatement when it exists. Material misstatement can arise from fraud or error materially, individually, and these are the normal sentences. We will, as of now, leave it. Okay. Now, next part here. These are the specific responsibilities of the auditor. Identify and assess the risk of material misstatement of the standalone financial statement with whether due to fraud or error, design and perform audit procedures responsive to those risks, obtain evidence that is sufficient, appropriate for providing your opinion. Okay. So whatever we have discussed now, how you will do the audit, it is the same. That what you will do is you will plan the audit, you will identify the critical areas, you will take the samples, okay, and then based on that you will obtain the evidence and you will then issue the report. This is the same thing which is written over here, but in a different language. Here they are talking about identifying and assessing the risk of material misstatement due to fraud and error. Okay. Design and perform the audit procedures, and then audit evidence, and then opinion. Simple. Planning, execution, analysis, and then your reporting. If I talk about here, this first part, identify and assess the material misstatement of standalone risk of material misstatement of the standalone financial statement. This is nothing but your planning. This is planning. Second, whether due to fraud and error or design, this is the type of error that you are talking about. Plus, design and perform audit procedures responsive to those risks. This is nothing but your execution. Third, they are talking about obtaining audit evidence that is sufficient and appropriate to provide basis. That is when you get the audit evidence, you understand what is the audit evidence, whether you have any misstatement, kind of an analysis they are talking about. And fourth is opinion, like issuing the report. Okay, opinion itself, like issuing the report, audit report. So they are talking about it is auditor's responsibility to plan, to analyze, to execute, and to issue the audit report. That is what we are talking about, because that is auditor's objective also. Throughout the audit we will understand, plus that is the responsibility of auditor also. Okay, then obtain understanding of internal financial controls. Next point, if you see, obtain understanding of internal financial controls relevant to the audit. That will again be part of which essay, under which essay you will do this.
This is a 220, sir.
220.
Sorry, 200.
265.
265. Okay. Anyone else? It is 315. Here you are understanding the entity and its internal financial controls. Understanding. 265 is about letting them know that, okay, there is an issue. But here you are understanding. Okay. Then next, evaluate the appropriateness of accounting policies and reasonableness of accounting estimates. Which essay do you think it will be? Accounting estimates.
SA 540, sir. Auditing, accounting, estimates.
Absolutely correct. 540. Then it comes about the going concern, that conclude on the appropriateness of management use of going concern basis. Going concern. Where the requirement is coming from. Which essay?
SA
560. 560.
570.
570. Similarly, after going concern, we have to evaluate all our presentation structure, materiality, all these things are there. Okay, if you see, here we are talking about materiality. Here we are talking about communicating with those charges governance. Here we are talking about relevant ethical requirements and independence, again, that we need to communicate to those charged with governance. Okay. Then we are talking about key audit matters over here, like most significant in the audit of financial statement. Okay. So there are multiple things that we are talking about when it comes to our responsibility. But these are the things which are already there as a part of the process of the audit. So whatever we will discuss as a process of the audit, it will become your responsibility also, that you have to do as an auditor. Clear?
Yes, sir.
Now, when I talk about your chapter number 2, okay, that is general auditing principles and auditor's responsibility. It is the some of the responsibilities of the auditors which are covered over here. Responsibility with respect to the fraud, laws and regulations, communications. Okay, we will understand what is the auditor's responsibility in case of joint audit and auditor's responsibility in case of the service organization. So we are understanding what auditor has to do when it is the matter of fraud, when it is the matter of laws and regulations, when it is the matter of communication. Basically, we are understanding how the auditor has to deal with these areas of fraud, laws and regulations, communications, and everything. Okay. So basically here what essays I will discuss is, you can say essay 240 plus 250 plus 260. I will cover up some portion of 265 plus 299 plus 402. Okay. Now this is the planning we discussed. Like we have to consider laws and regulations, we have to consider fraud, essay 240, 2650, updating the status, 260, 265, then 320, 300, and we all discuss. Now, and there are two specific scenarios. It comes to the 299 and 402. 299 is kind of a joint audit. When you are doing a joint audit, you need to consider what is your responsibility when it comes to the joint audit. So I will write here specific scenarios. One is joint audit and second is service organization. You need to understand both of the concepts when you are doing the audit, and that is required to be understood at the time of planning. And for that we have SA 299, SA 402 to make us understand what are these things and what to do in these areas. Okay, for planning. Clear till
Audit doc.
now? Huh?
Sir, what about audit documentation also will be there, no?
Documentation is kind of an area where it is not restricted to the planning. It is not restricted to any particular point. It is till the end of your audit. That's
Yeah,
why I have specifically not covered over here, because it's everywhere. Audit
yeah, yeah.
documentation, audit quality, it's not something restricted to the phase wise.
Okay, sir. From beginning to end, it involved.
Yes, from start to end, every time you have to think of the documentation. Everywhere you have to think of the documentation. So as a documentation plus audit quality are two important parts that is will be there everywhere in all these steps, irrespective of what step of audit or what you are doing in the audit. Okay. Now we will understand and we will start with first responsibility that we want to take up is SA 240. That is whether there can, like, what to do when it is a fraud, what to do when we are dealing with a fraud in a financial statement, how to tackle that particular area, how to understand and do things when we are talking about fraud with respect to a financial statement. Clear? And as usual, like always, I will also show you the bare text of the particular standard so that you guys can understand from where and from what is the source that we are taking up. Sure, Ayush, definitely. So wherever required, I will take up the reference of 200. I'll explain them 210, 230. Those are relevant and those are very important. So don't worry on that. Okay. Now see, when we do audit, when we start audit, we do a lot of planning. We do a lot of understanding the entity 315. We'll discuss on that. But we also consider about the fraud. Okay. Now, question to you guys: what do you consider when it comes to the fraud? Like, let's say, for example, you are starting an audit, okay, which you have received, your first client, what you will consider about the fraud? Some might say, no, sir, why we will bring the fraud into the picture? It is our first client and we have started thinking about the fraud. You have to. That is your responsibility also, and that is required as per the standard. And that is your auditor's responsibility to think about the fraud. So, what you will do and think about the fraud in an audit of a financial statement?
So
I want practical answer.
we will discuss the matter with the management and those charged with governance. First,
What matter? Which matter?
regarding the fraud that is happened or is about to happen.
See, about to happen is, if you'll ask management tell me, is there any fraud that is you are going to commit? I don't think so. They will tell you that. But apart from that, you can ask them if there is a fraud that has already been committed and you are aware about this. So you will ask about fraud that has happened.
Okay.
What else you will discuss with management? What else you will, ways of dealing with fraud, internal control, remedies. Like, Geet, can you explain ways of dealing with fraud? Like what you will discuss in ways of dealing with fraud, or what you will do in that? Anyone? Like when I talk about fraud, one point is that you will discuss with management. Are you aware about any fraud? Fine. What else you will do? Management says no, we are not aware about any fraud. Then matter over, or you will do something else.
We will check like what is the materiality level of that fraud, whether we need to report in audit report or we need to report to the regulatory authority. So those we need to check.
Materiality. Okay, fine. Yes, good. What else? What else you will do when it comes to the fraud?
Further, we will check internal control, like whether there is deficiency internal control due to what reason this fraud has occurred, and that we will discuss with the management that it was the responsibility of TCWG to mitigate. Like there should not have means internal control should be appropriate so that there won't be fraud. So that we will tell them like this is your responsibility. So their fraud has occurred.
Okay. Okay, fine. Anyone else would like to add something more? Okay, fine, not an issue. See, you are correct, not an issue. When we are talking about fraud, the one thing everyone knows is that they will discuss with the management that what is, are you aware of any fraud? Do you have any details of the fraud? But that is only just one part that we are required to do. That is only just one of the part that we are required to do, and that is the part which is known as the inquiries with the management. When I talk about what to do, see, understand, each and every standard will talk about what you are required to do. Okay, that's the best part of these standards. Like they help you to understand what you are required to do when it comes to a particular standard, or what is your responsibility. If I talk about simply this particular standard SA 240, it says that you have to inquire with the management. First and foremost part, inquire with the management that what is there. Have you, like, you ask management, are you aware about the fraud? Management says, Phil, no, I'm not aware about the fraud. Fine, great, that's good if there is no fraud. But second question should be, do you think there could be a fraud? Are there chances of fraud which are not detected? We are talking about, as of now, the fraud which have been detected. But do you think there is a risk that there could be a fraud in the company, or somewhere down the line? Have you received any whistleblower complaints or any signals that might, lead you that, okay, there could be a fraud in the company, okay, and you might are not able to be detected, or still it is undetected? Do you think there is a chance of that? So you ask from management that, what do you think, that is there a chance of having fraud in the company? What, as per your understanding, as per the management understanding, if I have to ask you, out of 100%, what are the probabilities of having a fraud in the company? Fair question, correct? Yes or no? I want to
Yes, sir.
assess
Yes,
management
sir.
understanding of fraud, not only the actual occurrence of the fraud, but management's understanding of the fraud. Now, the reason why is, the more management is aware about the scenarios of the fraud, the more they will try to bring the internal controls to prevent it. And the more management will be aware, reviews, they will check things diligently. The way you are the audit, you will maintain professional skepticism throughout the audit. Management is also responsible for the accounting of the company. So if they say, no, no, our company is kind of a company where there are high chances of fraud, so we have maintained a lot of internal controls to prevent it, means they are aware that there could be a fraud, but they have maintained good internal controls. So that's a good sign that there will be a less risk of fraud. Now, if their management says, no, 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 our company cannot be possible, there could not be any fraud, we trust all our employees, just trust will not work. So over there, you need to understand what internal controls have you put in the company to prevent the fraud. So management says, no, no, we have no internal controls. We trust our employees. Everything is fine. We know that from inside that everything is going perfect. In that case, that is a red signal, because that is something, management is not aware, or management is not considerate about the fraud itself. They are taking lightly. So whether the management has considered the risk that the financial statements may be materially misstated due to fraud, because see, the moment you have a fraud in the organization, in the company, it is going to impact your financial statement. The way for us, like whatever we are doing in the audit, the outcome is the audit report. Similarly, for management, whatever they are doing in the organization, the outcome is the financial statements. If anywhere in the company, if you have a fraud, the outcome is going to get reflected in the financial statements. Yes or no?
Yes.
So
Yes, sir.
similarly, I will ask, are you aware about fraud? They will say no. Do you think there could be a chances of fraud, and what you are doing to prevent it? What you are trying to do to prevent it? So over there, we will understand whether management has considered, with respect to the risk that the financial statements are materially misstated due to fraud. So you need to understand that. Okay. Whether the management has considered that the risk that the financial statements are materially misstated due to fraud. That is the one thing that you need to understand. And this is a part of inquiries with the management. I will do inquiries with the management and understand all these points. Okay, apart from this, what you will do?
So we will do the inquiry of the internal audit.
Inquiry of internal audit, yes. Okay. Understood.
And we will check with the in-house the legal counsel if any. We will check it
Mhm.
out from them, or even you can contact the employee directly. The different level of employee we can check it out.
Okay, yes.
As you discussed, is there any whistleblower mechanism? The employee voluntarily they will put in the box installed in that entity.
Yes, yes. Yep. Good. Yes. See, now you are absolutely correct. So over here, what we will do is we will understand what management is doing with respect to fraud. Like, okay, one the thing was their consideration. Like, are they considerate about the fraud? Are they, understanding the risk of the fraud or not? If they are understanding the risk of fraud, if they are considered about the fraud, we need to understand what they want to do as a next, like what they are doing in the business. For example, simple, that okay, let's say management is there, management is thinks, okay, no, we have implemented the internal controls in the company, we have implemented processes in the company. Tell me about that. Tell me about those processes. Tell me that how you are preventing the fraud. Okay, that is the part of inquiry only. I will understand from the management that okay, tell me how you are preventing fraud in a company. So, management's process for identifying and responding to the risk of fraud, basically, you can say that could be there in the company. Yes or no?
Yes, sir. If the management is itself they are overriding the control, they may not open up.
Yep. So, management's process for identifying and responding to the risk of fraud. Okay. And have they identified any transaction balance disclosure for a risk is likely to exist? Means any area that they think still after employing the what you can say uh, their processes and everything, they think no, there are high chances that there will be fraud. So these areas are something that we need to ask from them. Okay, so management process of identifying and responding to the risk of fraud. And as you said, we will do communication with those charged with governance. Okay, we will do communication with the management itself, and we will also check management's communication with those charged with governance. For example, let's say it's a big company where you have investors. Now we will go and ask them, okay, tell me what you have discussed with the various stakeholders and investors about the fraud. We are the auditors, fine, we are asking you the question, but I am 100% sure that the investors who have also asked you this kind of question in past. The investors are also worried about the fraud, because today, let's say for example, if you are going to buy a share of a company, you will always check, oh, is there any fraud in that company? My money is going to go waste. So I should be aware, like if there is any fraud or not. So if you are a very big investor, definitely you will ask management, did you identify any fraud in this quarter? Did you identify any fraud in this year? How you are making sure that the fraud is not happening? Not only the auditors, but investors will ask the same question, and you as an auditor will ask from management what you are saying to investors. Then tell us what you communicated to investors, various stakeholders about the fraud. That is something. As of now, I'm talking about inquiries, nothing much. We are talking about the part where I'm asking questions from management, various questions from management, so that I can understand some information on the fraud from with respect to the management. Okay. Now the fourth point is very important: management communication to its employees. Management says we are very good at the fraud prevention, we have policies, procedures in place. Do employees know about that policies? For example, before, like, very common area of a fraud in an organization is in, you can say, uh, expenditure claims. Okay, so employee expenditure claims is a very common area where you find petty frauds. Now, on that particular area, let's say, for example, management has a policy that all the expense claims, out of pocket reimbursements of the employees are required to be approved by management, or are required to be first submitted to the management before processing, or they cannot claim these type of expenses in out of pocket reimbursement. Now the question comes is, are employees aware about your policies? For example, employees cannot claim travel expense because it's not a travel related job. Are employees aware about that particular policy? Second, what is the tone at top? How strictly you deal with the scenario when you identify something? For example, let's say employees were not allowed to claim reimbursement for the travel. Like, there was no traveling job, so they were not allowed. Still, some employees were putting up travel related expenditure for claim, or some employees were putting up personal expenditure for the reimbursement. However, that did not went through because it got caught in the review. But how you are dealing with that particular scenarios? Are you taking that very strictly, or how you are taking those particular things within the company? Your policies, your procedures regarding business practice, ethical behavior, communication to employees, what is that? Is it strong enough? Basically, do you have a tone at the top for no tolerance to the fraud? So I will ask management, tell me, do you have that tone at the top which talks about that there will be no tolerance about the fraud, or how do you take it? So these are certain things that we ask from management. Clear? Any doubt with this?
No, sir. When there is a very big company, there will appointment the separate person for the dealing with the allegation of the fraud only. In very big company, we can inquire with them as well, legal counsel, like
Yeah,
that.
we'll come on that. We'll come on the different departments also. Okay. Now, this was something inquiries with the management. Just one part. What to do? We'll do inquiries. One part. Inquiries with the management. Now, if I talk about in terms of the language that is used, because you are also required to understand the language which is used. I'm explaining, that's a secondary story. But if you have read the chapter, you will come to know that what is the language that is being used, and how, like, what are the things. Okay, let's go to the study material to understand this. So this is the SA 240, auditor's responsibility related to fraud. Okay, always, always, I will show you a standard. Okay, how it works. When I talk about any standard, any standard, this is standard 240 bare text. How the standard is divided, what are the contents of the standard? See, first of all, you have the introduction and scope of that particular standard. The first and foremost thing after the introduction, you will see scope of that essay, when it is applicable, where it is applicable. Second comes the objective. Okay, this scope talks about applicability. Can anyone tell me what are these objectives that we are talking about? What is this objective?
It is objective of auditor relating to fraud, means what he has to do.
Yes. So what auditors is supposed to achieve? When I talk about objectives, objectives of auditor. This is objectives of auditor. What he is required to achieve at the end. Okay. what he is required to achieve at the end. And to achieve that particular part, he needs to follow this requirement. To achieve this, follow this requirement. Simple. This is how your standard structure is there. Let's talk about SA 240's objective first. Scope I will see. Scope we will go for a time being. Let's go to this objective first. See, what is the objectives of the auditor? This is what auditor wants to achieve. Yeah, he has to achieve at the end to identify and assess the risk of material misstatement in the financial statement due to fraud. So auditor has to identify and assess the risk of material misstatement. Okay, this is something auditor has to achieve. And not end of audit, but end of activity. Whatever we are doing, that activity. Second, to obtain sufficient and appropriate audit evidence about the assessed risk of material misstatement due to fraud by designing and implementing appropriate responses, and to respond appropriately to identified and suspected fraud. Okay, so this is something auditor has to achieve. So whenever you see a standards tell you what auditor has to do, what is the end outcome that auditor has to achieve, and that is none other than your requirements also, or responsibilities basically. Because you have to achieve, it becomes your responsibility. Remember, we talked about your objective will become your responsibility. So identify, obtain evidence, and to respond. That is something is your objective and your responsibility. Now to identify, you will do something. To obtain, you will do something, and to respond, you will do something. And that we are understanding as of now. So first, to identify and assess the risk of material misstatement. To identify, as I told you, when you will start audit, what you will do with respect to the fraud, you will inquire with the management. That is the first part. So risk assessment procedures, I'm talking about. Risk assessment procedures. So you will perform risk assessment procedures. What is the first procedure that we talked about? Management and others, inquiring management and others within the entity. So you are required to make inquiries with the management and others within the entity. That standards tells you, okay, you are required to do that. Now, if you are required to do this particular part, then what you are required to do in this? Number one, you will communicate or you will inquire management of their assessment of the risk of the financial statement. Management's assessment of the risk of the financial statement. Remember the first point we discussed. What management thinks about the fraud. Are they fine or they have implemented something, or what they are like, what is their view on the fraud? Okay. Second, management's process for identifying and responding to the fraud. How management is making sure that there is no fraud, what they are doing, internal controls, policies, what is the scenario, including any specific risk of fraud that management has identified, okay, or brought to its attention. So anything management thinks the fraud is there or they are aware about any fraud kind of thing. Third, management's communication to those charged with governance. Remember investors we were talking about, like those charged with governance may include investors, other various stakeholders. That management will communicate with them also, because they are also going to ask the same question. And fourth, management's communication to its employees about fraud or what policies, procedures they are implementing. The 4 points that we discussed are here also. Clear?
Yes, sir. At the communication at that TGW and the employee level as well.
Yeah. Now, one more important area that I want to discuss here is when you are writing the answers specifically, most of the people will write, or most of the student will write fraud risk. You use this term. Okay, let's be fair. You will use this term fraud risk. Yes or no? In writing the
Yes, sir.
answer, you will use this term fraud risk. Instead of that, what you need to write is this part: risk that the financial statement may be materially misstatement due to fraud, materially misstated due to fraud. Or you can talk about risk. When I talk about risk of fraud, you can also use this term, that risk that the financial statement may be materially misstated due to fraud. If you see, the term that is being used is this one. If I go to objectives also, risk of material misstatement in the financial statement due to fraud. See, when I talk about fraud risk, now risk of fraud, perfectly fine, good term. We are able to understand. But this is more appropriate. That is a shortcut. Risk of fraud. This is the full term: risk of material misstatement in the financial statement due to fraud. Because as an auditor, we are concerned with the material misstatement. Let's say there is a fraud, there is a risk of fraud, but there is no material misstatement. Will you still be bothered by that? Like I say that there is a fraud risk, but no material misstatement in FS, or fraud risk not in FS. Let's say fraud risk not in FS, but in operations or somewhere else, which is not impacting your financials. Will you be concerned with that? No, you will not be bothered by that. Unless and until something is not impacting your financial statement, you will not look into that. Correct?
Yes, sir.
Yes. So when I talk about fraud risk or risk of fraud, it's an incomplete term in itself. It doesn't talk about what it will impact on the financial statement. It does not talks about the impact on the financial statement. That's why you should avoid using these terms. Okay. Rather than use this one, risk of material misstatement in the financial statement due to fraud. It's a proper term. It talks about, yes, there is a risk of material misstatement in the financial statement, and that is because of the chances of fraud. That is a more appropriate term.
Yes, sir.
Okay.
Clear, sir. Auditor, fraud risk is different than due to fraud. The statement gives the different meaning.
Yes, yes, absolutely correct. So always make sure that you use more appropriate and more proper terms than the terms which are being used as a generic terms. Okay. So do not use fraud risk. Instead, use this one. And that is the purpose I'm making you take you through the standard itself, because you can understand the terms, the terminologies that are being used. So you know what happens is, when we go for the reading, when we read these things, what is the risk that the financial statement may be materially mistaken due to fraud? Why to write this long? Because there is a reason behind it that provides the clarity. Because fraud risk may not impact financial statement, but when I talk about this particular term, yes, it's saying that it is impacting the financial statements. Okay. Okay. Now, second, once we do the inquiries with the management, what you will do? After inquiries, what is the next step? Anyone? After
We have to,
inquiries, what is the next step? Yeah.
we have to obtain that appropriate audit evidence for that.
Okay. Okay. Appropriate audit evidence for that. Fine. What else? Like, you will obtain appropriate audit evidence that is part of the testing and everything. But let's say for the planning part, I'm talking about planning. What you will do more in the planning. Just now you said that particular answer a few moments before.
Yes, sir. In the inquiry stage, we will check with the legal counsel if anything is there, and also we will see any particular specific person is appointed with respect to fraud. He is in charge for the fraud overall aspect, and also we will check with the employee, other employee, and authority. We will check it out, and also we will see in the financial department the supervisor level and other level also we will check it out.
Absolutely correct. Very good. Yes. So not only management. Now you were talking only about management, but there are other people in the company apart from management. We need to go to them. Okay. We need to ask them what do you think about fraud in the company? Do you see any such transaction which is fraud? And the best part is, who are these people? The people who are appointed to look after the fraud. Can anyone tell me who is appointed in the company to look after the fraud?
Internal auditors.
Yes, very good. So some people say forensic accounting guys. Answer is no, internal auditors. You have an internal audit team in an organization, they look after the fraud. Okay. So what is the scenario is, when we talk about internal audit function, there is an internal audit function in the organization that they look after for the fraud. Okay. You do inquiries with them. You understand, okay, what is their understanding about the fraud? Have they identified anything with respect to the fraud? Inquiries with the internal audit function. You perform inquiries with them. Okay, internal audit function, tell me, what do you think about the fraud? Okay, it may be actual. If they have identified, it could be actual fraud. It could be suspected fraud, means they have not identified actually, but they think there could be a chance of having a fraud. So it could be suspected, or it could be alleged. What do you mean by alleged? Means someone is saying that there is a fraud, but we are not able to validate still. So actual, suspected, or alleged. Actual means fraud has happened. Suspected means we think there could be fraud, but investigation is pending. And alleged means there is a manager in one particular department. He has done a whistleblower that okay, there is a fraud in the company. He is alleging there is a fraud, but investigation is pending. So these are the things. Plus, you will check with the operating personals, procurement manager, sales manager, marketing personals, marketing head, employee who are head of the departments, basically CEO, like apart from the CEO, like COO, CTOs, and all that particular, executive level employees. Employees involved in the complex transactions. For example, if there is a particular mergers team within the company, if there is a core accounting team within the company or something like that. In-house legal counsel, right now you are discussing ethics officer. In a company you have an ethics officer, they look after for the ethics related compliance. So ethics officer. So these are the people who are the ones where with whom we will communicate. We will do inquiries and we will ask them, okay, tell me, what do you think about fraud in an organization, in your organization, basically. Okay, so apart from management, now we are talking about more with respect to the fraud. Yes or no? That is the second step of the inquiries.
Yes, sir.
Now, once you do this second step of the inquiry, what you will do? What is the next step? What is the next step? In planning, I'm still in the planning phase. I have not gone to the execution.
Then we can evaluate the reason for the fraud risk, from where it is coming.
Okay. Okay. Anything else?
Discussion within the engagement team between among themselves.
Yes, discussion within the engagement team, but why that is required? Why do you think that is required? Very good.
Sorry,
The point is good, but what is the reason of that particular discussion?
sir, see, when there is a fraud risk factor is identified already, there is a opportunity, that is a then we have, then whether we have the sufficient team members are there to further evaluate that, to identify the evidence, like that, we have to plan it. See, you have to concentrate on this, like that, that audit allocation will be there, where to spend more time, that we have to discuss with the team member, right?
I'll tell you. Yeah, absolutely correct. So discussion with the team or discussion among the team, one of the area. Discussion among team members. Why it is required? The reason, because when we are talking about fraud, it is not the thing that you might be only aware about the scenarios. You might be the one only aware about the things. Or see, in a audit, understand, there are multiple people with whom you will conduct the inquiries. Let's say, for example, you went to the inquiry for the CEO. I went to the CFO. I got some other information. You got some other information. Now, time to cross check the information. What response you got? What response I got? Similarly, there are other team member in the there are other people in the team who will do inquiries with others, like ethics officer. Just now we discussed ethics officer, operating personnel, employees, internal audit function, management. Even when I talk about management, there are multiple people in the management. So we will conduct multiple inquiries. It will not be the scenario that I am the only one who is conducting the inquiry everywhere. No, each and every team member will be given some area to conduct or personnel to conduct inquiries. So at the end, when you will sit together, you will discuss and cross check. Okay, I got this information. What you got? They will talk. They will say, okay, I got this information. Okay, now, like even plus there, like even beyond that, let's say in discussion, you have the engagement partners. Engagement partners have their experience with the entities. They have done audit in last year also, last year also. So they know about what, like where can be the fraud. So discussions, okay, and emphasis on and how on and like on you can say how and where, rather how and where the entities FS can have fraud, like how there can be a fraud, what schemes employees or anyone in the company can adopt for the fraud, where can be fraud, which area. So your discussion and emphasis is placed on that. Okay. And when I say fraud, basically when you are writing, you have to write entity's financial statement may be susceptible to the material misstatement due to fraud. Risk of material misstatement due to fraud. Okay. Risk of material misstatement due to fraud. But here I'm writing this fraud for your understanding. So you do a discussion among the team members. Plus, very important part, you have to maintain professional skepticism. Okay, you have to maintain professional skepticism. Now, why professional skepticism? We have already discussed, or you already know in SA 200, that is a requirement. Be alert. Keep your ears open. Okay. So, professional skepticism, in accordance with SA 200 also, auditor is required to maintain professional skepticism throughout the audit. even for the fraud also. Okay. What else you will do? What else you will do? We have discussed inquiries with the management. We have done internal audit function one, like internal audit. We have done inquiries with the internal audit function and others. Here I will write management plus those
Sir, can
charged
you,
with governance.
yes, sir, can you get that written representation from the management and those charged with governance related to fraud? Yeah, as per SA 580.
That is there, but that will be kind of your part of the supportive audit evidence. But I'm talking about planning. What you will do in the planning.
Okay, I thought of getting the written representation from them as well.
That is
In
part of
the
the somewhere execution, not planning. What
okay,
else you will do in the planning? I'm not going still on the execution side. Anyone? What do you think that we should do when it comes to the planning? Apart from this. Okay. This is what Geet, we are doing for the planning. Like the outcome is to plan audit procedures to detect fraud. But what specific steps you will take during the planning? Okay, the one is
Analytical
procedures is there.
procedures.
Huh?
Analytical procedures. We will
Yes,
do
very good.
analytical procedures.
So there is a misconception, or some people understand that analytical procedures are only to be performed at the execution part, but it is not the case. You can perform analytical procedures on the data that you have received at the time of planning. So analytical procedures is basically analytics is a techniques. Okay, it's a technique, it's a method of understanding the data. You can do analytics and you can understand the data that you have received at the time of planning. It's not an execution, it is something you are still in the planning, you are understanding the data by way of analytics. Simple. Okay, so rather than I would say analytics, the term I will use is unusual, because that is the outcome I'm talking about. By doing analytics, what I will be doing, unusual or unexpected relationships. So I will try to identify, like through analytical procedures. Okay, I will try to identify whether there are any unusual or unexpected relationships. Now, when I talk about relationships, these are the correlations between the data. You can say correlation within information. I'll give you a classic example. Let's say I went in an inquiry of a CFO. Okay. I asked CFO, are you aware about any fraud? He said, no, I'm not aware about any fraud. I asked CFO, do you think there is a risk of fraud involved, or there is something involved in the fraud? He said, no, I'm not aware about anything. And I am not, aware about any such thing in the company. I think our internal controls are good and working fine. I will ask him, like, do you aware about any whistleblower complaint or something like that? He said me no. Fine. I went an inquiry for the different personnel. So I reached to the marketing manager's head of marketing. I asked him, okay, marketing head, do you know any fraud in the company? Actual fraud? He said no. I asked him, do you suspect could be a fraud? So he told me that he wrote a letter to CFO or CEO that he thinks that there is a fraud in the procurement area. So marketing guy was, whistle kind of doing whistleblower in the procurement area. He provided some more information why he thinks there is a fraud. I asked him, "Have you written this letter to the CFO?" He said yes. And I asked him, like, "Do you like did you have the conversation with CFO on this?" He said that we had the detailed conversation on with CFO, and CFO assured him that he will do further investigation. And when I asked from the CFO, he told me he's not aware about any such scenario, any such fraud, or any such whistleblower complaint, unusual relationships. I was not able to correlate the information that I received from here. I received from here. There are unusual things which are happening, unexpected things which are happening. And I asked him, "Can you give me that letter?" And he provided me that letter or the email copy that he sent to CFO. I went to CFO. CFO, this is a letter that we have received from the marketing head. Why you not informed us about this? Then he told me, no, this is just, I forgot. I skipped it. It skipped from my mind, and he was trying to change the topic. So these are unusual things. And by this information, when you will do analytical procedures, you will try to correlate the information. You will come to know about unusual, unexpected things, and that will increase, or that will may lead to risk of material misstatement, high risk of material misstatement.
Yes, sir. Integrity of that management.
Yes, that's why we assess the integrity of the management before accepting the audit also. But let's say this will also create an impact. You have to keep this in mind when you are assessing management representations also, because now a representation by this personal CFO was like, he was not able to provide you detail appropriately, or the details he provided you was incorrect. So every time that raises a question on the credibility of the representations done by the management. So
Yes, sir.
unusual relationships and unexpected relationships.
He actually hided that information, whatever he received already.
Yes. What else you will do? There are a lot many things to do in planning, but there is one last thing that we will discuss. What else you will do?
Sir, we will check with the third party as well, sir.
Third party, okay. Third party
Let's
as in,
say, yeah, bankers.
mm, okay,
And also we can see the bank statement. Is, is there any unusual transaction hinted on that, or the related party transactions which is
okay.
not disclosed?
But that initially is very difficult to identify, because bank
Is
statement
there,
will not contain the names, and you need to do a lot of digging up. That may come up in the execution. We will see that, but as of now in planning might not be possible.
yeah, it's not possible. But you are asking,
Practically,
but
what you will do?
yeah, yeah. I think we almost covered, I believe. If you are asking more, then we will go into the procedure only now.
Okay, so now we will talk about presumed risk. Presumed risk of fraud. Now, what is presumed risk of fraud? I will talk about two different areas where I say there is a presumed risk of fraud. When I say presumed risk of fraud, means there is a presumption that there is a risk of fraud in that particular area from start. By like, if you do anything, if you don't do anything, this area will have risk of fraud always by default. Okay, so you can say, even if
Uh,
you don't do any procedure, you have to understand that there is a risk of fraud. So presumption that there is risk of fraud. Now, the first area and the very critical area is revenue.
revenue recognition, yeah, mainly the cash handling.
Yeah. So in revenue, what I will understand is, or what I will say basically is, I will assume, I will from day one, okay, I will assume that there is a risk of material misstatement, okay, due to fraud in revenue recognition. Risk of material misstatement due to fraud in revenue recognition. That the revenue recognition is impacted by the fraud risk. That is a one particular area, very important area. And that is a presumed risk of fraud. By default, you don't do any other procedure. This is risk of fraud. And when I say risk of fraud, I say high risk area. Okay, you can tag it as a high risk of material misstatement areas. By default, it will become high risk. The moment I say fraud risk, by default, it will become high risk, or some use the term significant risk. Okay, significant risk of material misstatement on a higher side. What difference does it make if I say high risk or significant risk? And can anyone tell me what difference it will make if I say no, it's a high risk? What difference it is making? Anyone?
So here, when the cash is involved, there is a possibilities of always this misusing that opportunities, that power.
No, I'm saying what is the difference it is getting if I say high risk. Now, let's say, for example, what is the difference if this particular area is a high risk or low risk or medium risk? What difference does it make?
Because the involvement of cash is more on this revenue recognition.
Hypothetical example, let's say fraud risk, revenue recognition. Okay, fraud risk, revenue recognition. Okay, I say this is a high risk. This is
Okay, you are
FY
asking
20.
why the revenue recognition is the high risk.
No. Let
Uh,
me. Okay, fraud risk for the revenue recognition, high risk, FY 23-24. Where I said fraud risk, revenue recognition, it is medium risk. In FY 24-25, what difference does it make? What is the difference in between both? Like, what difference it will make? I term this as a high risk or low risk or whatever risk it is. Like in second year, I changed the risk from high risk to the medium risk. What difference it is making? I'm just asking difference between both.
so when there is a internal control is more strong, then there is a low level of risk.
Okay.
There exists a risk of material misstatement in both the year, but financial statement material misstated high means greater in the case of first year, that is 23-24.
No.
Sir,
Ayush, you are absolutely correct.
sir, I'm not exactly getting what is the question is actually.
What is the difference? Let's say what difference? I have tagged in the FY 23-24 the fraud risk due to revenue recognition as a high risk. In the subsequent year, I tagged that risk as a medium risk. Now, what difference it will make? Like what different it will happen when I will change the risk classification? This is a risk classification. What will be the impact of changing the risk classification from high risk to medium risk?
Okay,
Basic test.
yeah,
Yeah.
which means that the entity is following the policies and procedure within which they are working very well. The internal system are working very well.
Yes, but in audit, when you are doing the audit, what impact it will do in your audit?
The auditor will have to increase the audit procedures to identify the risk
Absolutely.
of material.
Yes. So high risk means high audit. When I say
Yes, sir.
medium risk is something your procedures are less, you need to get less sufficient and appropriate audit evidence compared to high risk. Higher the risk, higher the audit you are required to do. Lower the risk, lower the audit you will be doing. Clear? So there is a correlation between the high risk and high audit. Remember?
Yes, sir. Whenever there is a risk is high, we will deep dive into the process
Yes,
completely.
absolutely. So that is the thing. That difference it will make. So when I say fraud risk is a high risk, by default your procedures now will jump to high. Remember that you have to obtain high audit evidence, and there are two ways to get audit evidence.
Yes, sir.
Okay, there are
We'll allocate more resources for that.
there are two sources from where you get audit evidence. I'm talking about sources of audit evidence, sufficient and appropriate audit evidence. Two type of testings. Basic audit 101.
Yes,
Test of
sir.
control and
External confirmation we will get and the internal.
test of control and substantive
Absolutely.
testing.
TOC, TOD. Test of controls, test of details. You call this compliance testing. And this is substantive. Yes or no? So whatever evidence we will get from in TOC, remaining of the evidence we have to get it from the TOD. So the more like the higher the risk, the higher the evidence you need from either test of controls. If you are not able to get the evidence from the test of controls, everything will fall back on the test of details. Basic audit 101. Clear? What I'm saying here is
Yes, sir. Clear, sir. Test of details.
test of
Test of
controls,
control.
test of details. Audit 101, that you have to obtain sufficient and appropriate audit evidence either from the test of controls. See, always test of controls will not provide you the full amount of sufficient and appropriate audit evidence. You need to do some test of details. So these two testings together will provide you sufficient and appropriate audit evidence. And the quantum of the sufficient and appropriate audit evidence will depend upon the risk which is there. Okay. So this quantity will be directly linked or proportionate to audit risk classification. So the more the quantity you require, the more test of details and test of controls you will be required to do. So the higher the risk, higher the testing. That is the basic stuff I'm talking about. Okay, now coming back here, when I talk about presumed risk of fraud, I said this is the high risk of material misstatement areas, or you call it a significant risk. When I say significant or high risk areas, that means by default your procedures will be more because you need more audit evidence. Yes or no?
Yes, sir.
Yes, sir.
Yeah. So that is the whole point I'm discussing over here. So there is a difference when I call a particular area high risk, and there is a difference when I call a particular area as a medium or low risk area. Okay. Now, when I talk about presumed risk, one is the revenue, which is the second one. Okay, for those who do not know TOC and TOD, it is test of controls is a TOC where you do control testing, design and operating effectiveness. And TOD is a test of details, substantive procedure, testing, basic testing, sample testing, all those things, external confirmation that you do. Okay, so coming back to my question, which is the second presumed risk we have already discussed?
Management overhead controls.
Yes, absolutely correct. It is management. Okay, so area of management and control, that is risk of material misstatement due to fraud. Okay, with You can say management override of control, or due to management override of control. Okay, so that is a second presumed risk area. That is a second presumed risk area. That means that is the area where you will do high testing by default. You will do high testing by default. Yes or no? Clear?
Yes, sir.
And that is something you decide in planning itself. That is what you are doing in planning. You are from day one, you are saying, no, these are high risk areas. Then my planning is accordingly. So from day one, you are talking about, okay, these are the high risk areas, and you will do more testing. Clear? Any doubt?
Clear, sir.
Okay,
Clear,
great.
sir.
Okay. So this is what we do in planning. This is something that we do in planning. That is the planning part. Nothing else. What we have discussed with respect to the fraud. And there are other areas that you might consider there is a fraud risk. Now that is based on the fraud risk factors. So apart from the presumed risk, you will consider, or you will at the end, after getting all this information, okay, after doing all this planning, you will do one more step. You will identify fraud risk in other areas. So after getting all the information and everything, what you will do? You will identify where is the fraud risk. Simple. What is the purpose of getting this information? To understand the areas where there is a fraud risk. At the end, that is our first objective. This is nothing but objective number 1. If I go back to the standard,
To identify and assess the risk of material misstatement in the financial statement due to fraud.
yes, absolutely correct. So that is my objective number 1. Okay. This one, to identify and assess the risk of material misstatement in the financial statement due to fraud. This you will come after the planning. After planning, or at the end of planning. Okay. Or at the end, you will achieve this objective. And to assess, basically, you will use fraud risk factors. So to finally, to achieve this particular objective, to identify fraud risk factors in other areas, you will consider fraud risk factors. What are the fraud risk factors? Fraud risk factors, quickly.
So, sir, it is a event or condition that incentive or pressure to commit the fraud.
Absolutely correct. Yes. Most of you know this as a fraud triangle. Okay. Conditions or events that indicate there are chances of fraud. Fraud triangle, which is incentive, opportunity, rationalization. But fraud triangle, there is one more concept, and basically it's now beyond these 3 things. Okay, so there are other theories also of fraud. It's not only fraud triangles, but there are other theories of fraud which is there, in, like, which our auditor may consider, or if he wants, he can look into those. Okay, apart from incentive, opportunities and rationalization, there is one more particular area, or your theory, which is known as a fraud diamond. Anyone heard about fraud diamond?
No, sir. No.
Okay. Fraud-Dreiman theory basically talks about what you can say, uh, like four aspects. So it adds one more aspect, okay, to the fourth triangle theory. So the fourth one is the capability to commit the audit. As of now, like we will not discuss in detail the Ford-Dreiman theory, but yeah, this is a theory which talks about more than the triangle. It talks about that incentive, opportunity, and rationalization is fine, but the fourth one should be the capability to commit the fraud. That's a diamond theory. Just for your information, okay. But basically, in your module, if you go back in your study material, also, we'll go now back to the study material, and we'll see what is given and how it, what we have discussed, how it is linked to that. Okay. See, we discussed the objectives. Out of that, we are now able to achieve the objective number one. We understood how to achieve objective number one. This one. We will now, in the later part of the session, we will understand about the objective 2 and 3. Okay. Meaning of fraud, like we have discussed about the fraud. Uh, Basically, it is the definition of the fraud. Fraud is divided into two parts: financial reporting and misappropriation of asset. I will come to that when we'll come to the what you can say, execution part. Okay, the types of fraud basically. Then again, going back, primary responsibility to prevent and detect the fraud. So, who's like, this is a very important part that I have to now discuss is when I talk about fraud detection and prevention, whose responsibility it is? Management's responsibility. Always remember, first prime responsibility is with the those charged with governance and management. Auditor is the one who will conduct the audit. Its role is not to detect fraud. The role to detect fraud and prevent fraud is of management. Auditor's role is to do the audit. And while doing the audit, he has to consider the risk of fraud. There's a difference between prevention and detection of the fraud and considering the risk of fraud in an audit of a financial statement. So you can write over here that prevention and detection of fraud is not equal to considering risk of material misstatement due to fraud in an audit of FS. When we are talking about audit of FS, if we are considering risk of material misstatement due to fraud, that is something different than the prevention and detection of the fraud, because prevention detection responsibility of management. When I talk about considering the risk of material misstatement, it's the responsibility of auditor, and both are different. Both are different. Clear? Then we discussed about the responsibilities of auditor. Okay. We discussed in detail what is the auditor's responsibility with respect to, we also saw the audit report for that, fraud risk factors. So what are the fraud risk factors? Just now we discussed. Okay. Pressure or incentive, then you have opportunity, and then rationalization, so to commit the fraud. So these are some examples, incentive and pressure examples. Like this is the example, or incentive and pressure, very good. I will recommend you to read. Then you have information available with the entity with respect to these, again examples. This is example with opportunities, and this is the examples of rationalization, the three fraud factors basically. Okay, so these are very good examples given. Okay, what could be the fraud risk factor with respect to rationalization, with respect to incentive, with respect to opportunities. Okay, very good part to go through it. Now this is again given for the misappropriation of asset. Earlier, those were with respect to the fraudulent financial reporting. I will cover up this part. What is the fraudulent financial reporting and what is the misappropriation of asset at the time of execution after planning? Okay. So again, these examples are given, and uh, I would recommend you to read. We talked about maintaining professional skepticism. We talked about discussion among the audit team members. We talked about risk assessment procedures. Okay, what risk assessment procedures we are required to do. Again, the part of the planning that I'm talking about. Then the next part that we will come now or we will discuss is the response to the assessed risk. That is doing the audit of the fraud. Okay, not collecting the evidence. That is the next part that we have to discuss. But before that, any doubt? Any doubt?
No, sir.
No? If no doubts, then I will let's take a break over here, and then after the break we'll gather back and continue the session. Let's take a quick break of 10 minutes. Thank you. discussion. Now we discuss about the planning phase. We discussed in detail what we will do in planning, what we are required to do in planning. We are clear with that. Now, second part that I want to discuss is about execution beyond planning. What you are required to do when it comes to the beyond planning. So, what you will do when it comes to the beyond planning, like execution, response to the risk. Now you have identified and assessed the risk. That's why now we will say that after identifying, assessing the risk, we will respond to the risk. Okay. Response to the assessed risk of material misstatement due to fraud. So, how will you respond to that risk? What you will do when you have to respond that risk? Am I audible?
Yes, sir. You are audible, sir.
Yeah. So, what you will do when you have to respond that risk? What things you will do? Basically, I'm asking about testing part. See, I have to achieve now second objective. What is the second objective?
Respond to the assessed risk of material misstatement.
To obtain sufficient appropriate audit evidence.
Yes. To obtain sufficient and appropriate audit evidence about the assessed risk of material misstatement due to fraud through designing and implementing appropriate responses. That is the second objective. I need to achieve this objective. I need to obtain sufficient and appropriate audit evidence. What I will do? What I will do? Quickly.
Will be checking the entries, like what about the if there is any fictitious journal entry passed or not. So those details we will collect, and if they we will check whether there any entries are omitted in the financial statement or not. Such kind of things.
Yes. Yes. Very good.
Yeah, once we identified that risk of material misstatement, there is a fraud is there, then we have to obtain the relevant appropriate audit evidence by way of desktop details and desktop controls. We will do it to obtain the audit evidence to form the opinion.
Okay. But how you will collect the audit evidence? What you will do? I want practical answers. Like on the ground, if you are given the audit, I'm giving you the audit, or you are taking up the first audit, on ground, what you will do? How will you collect the evidence, sufficient and appropriate audit evidence? How?
By inquiring.
That is done on the planning. Planning portion done. Matter over.
So
Now we are talking about.
based on the materiality, yeah, we will collect the appropriate evidence. Say example, we will get that the external evidence, external confirmation also from the outsider, and the creditor balance confirmation, and getting the bank statement, bank balance confirmation from the bank.
Yes, yes, very good, very good. Yes. So
And all.
you do a lot of testing, correct? These are
Yes,
the
sir.
on-ground examples, like bank confirmations, like you will check the balances. See, at the end, we are conducting audit. Okay. At the end, we are conducting audit. So we will do audit procedures. What are the audit procedures? You just now told me. Bank
Yes,
confirmation,
service. Yeah.
sample testing,
And also the customer confirmation that
customer,
sales
yeah,
bank.
vendor confirmations. Sometimes do vendor reconciliations also. A lot of things can be done. Yes. So if I have to summarize that everything that you told me in one line, or 1 to 2 line. Okay, it is pretty straightforward that I will do. I will say that the auditor has to determine the overall responses to address the assessed risk as per SA 330. Okay, so all that testing I'm talking about is I will do the testing based on, so auditor has to determine overall response to assessed risk of material misstatement due to fraud as per SA 330. Now in 330, when we will discuss 330, I will come back and I will discuss this point again, like how at the time of discussing SA 330, we determine the overall response. Okay. But you are correct. I summarized all the procedures in one line. That bank confirmation, vendor confirmation, customer confirmation, sample testing, okay, analytical procedures, a lot of things. Now, but there are some specific areas that we are required to do apart from all the generic procedures that we will discuss. Some specific procedures are there. What are these specific procedures? Let's say number one. I'll give you a question. You tell me the answer, and that will be a specific procedure. Trust me. So I told you revenue recognition, critical area, significant risk. I asked my first year article to test the revenue. Like, let's say, for example, I have got the audit of an insurance company. I asked my first year article, okay, go ahead and test all the revenue testing is onto you. He is doing first year article, first time audit, no background, nothing. I asked him, okay, go and check the revenue, which is a very critical area. Do you think is it appropriate?
This is not appropriate, sir. Sir, we should allocate the person, those who have that expert knowledge in that area, and otherwise we need to train them as appropriately before the engagement.
Absolutely correct. Yes. So what I'll do is appropriate allocation of work. Like first of all, I will appropriate allocation of work will be done based on the risk of the area. If higher risk, I will assign some senior person to test. If lower risk, I may delegate it to first year article, or I may assign some, first year, second year article along with a review, something. I do a mix and match. But I have to do appropriate allocation of the work. Yes or no?
Yes, sir.
Okay. Now the second question. Am I only required to do testing with respect to procedures? For example, customer confirmations, vendor confirmation, sample testing. What I'm doing is I'm picking up samples, I'm sending confirmations. Is it that thing that I'm required to do with the samples and the confirmation with the balance, with the numbers? So the testing is on the numbers only.
There will be test of controls as well.
Okay, test of controls, yes. Perfectly fine. Test of controls will be there.
So whenever there is a question, also we can involve the expert. We can involve expert opinion also. We can involve outside people. We have to check the independence and confidentiality to be discussed and kept in control.
Okay. But when I talk about testing, let's say as of now, let's go to the test of details, not the test of controls. Okay. For a time being, I'm keeping the test of controls inside. Okay. Let's talk about test of details. Am I only required to check numbers in test of details? So, that is a misconception that when we talk about testing, we only talk about numbers. Is it so?
No, sir. See, what is a SOP? Exactly whether the SOP is there, how the SOP is operative in nature, how the account balance is classified and discloses how it is there, and the class of transaction and whether it is a correct account and all these things we need to check it out, sir. I mean assertion level.
Yes, assertion level, very good. But what else I will check beyond the numbers? Facts, title, terms need to be checked. Yes, very good. Assertions are tested. Yes, absolutely correct. Assertions are tested. But assertions with respect to, see, when I talk about assertions, assertions are tagged either to number or to some other areas. Okay. So when I talk about assertions, it can be related to numbers also, it can be related to other areas also. Very good, Ayush. Disclosures beyond numbers. Disclosures. Accounting policies beyond numbers. Okay. So my testing is not restricted to only numbers. I need to test beyond numbers. So you can take testing beyond numbers. That is something you can say evaluation of accounting policy and disclosures. Okay. So I have to see, for example, you have an accounting policy. Most of the accounting, let's say revenue recognition, 5-step approach. Yes or no? Have you gone through the accounting standard on the India's on the revenue recognition?
Yes,
Yes.
sir. Yes, sir. 5-step model.
5-step model?
India is
In,
115.
yes, India's 115. Instead of that, company to whom India's is applicable, they have the accounting policy that all the revenue is recognized in the year or in the month when the order is received, irrespective of the payment received or not. Order received, recognize revenue fully. Is it issue? Is it fine? Appropriate?
No, sir. That delivery and control should be transferred to the customer.
5-step approach. Yes, we have to see. And when your accounting policy itself is not aligned to the Ind AS, there are high chances of material misstatement. Yes or no? Now let's understand from the broader perspective. The accounting policy was designed intentionally in such a way that you can manipulate with the revenue. This is very simple example that I'm giving to you, but there are scenarios where management determines or decide the accounting policy in such a way that they are using the accounting policies, they are able to manipulate the revenue. They will tell you, see, our recognition, revenue recognition as per the accounting policy, what you will do.
This is an example for obscuring.
So you have to go beyond the numbers. You have to see the accounting policies and disclosures. Is management able to manipulate the numbers through accounting policies? Or are there any complex accounting policies which is giving? See, what is the risk factor? Opportunity. Yes or no? Pressure or opportunity? The first risk, fraud risk factor.
Yes,
Let's say
sir.
your accounting policy is so complex that it is presenting the opportunity to do the fraud, or they are not appropriately drafted. People can take advantage of that and they can do fraud. So accounting policy is very critical area to determine whether there is a fraud risk or not. Go beyond the numbers. And third and very important thing that you should consider is incorporate unpredictability. Can anyone tell me what is this? Unpredictability. Yes, Geet, very good. What is unpredictability?
See, unpredictable means, sir, when we allocated some time and resources for the particular work, see, suddenly in that area the fraud risk is there, then we have to involve more time on that. Then we have to deep dive into the process, right?
No. No. What is unpredictability? Something similar, Geet. Yes, something similar. No, Chitra. Okay, I'll tell you. When I talk about unpredictability, okay, so you test based on materiality, yes or no? We test based on materiality. When I
Yes,
talk
sir.
about unpredictability, means doing a testing which is not predictable by management. Management already knows that you are going to use materiality for your testing. You are going to pick high value items. You are going to pick big items for testing. They would keep it clean. They would keep it, arranged, clean, everything. You will test items which are not material, or which management thinks, auditor will not look into this area. This is very small and petty area.
Okay. When
So
such a
doing
situation,
what is
yeah.
not expected by management, or you can say including samples which management might not expect you to include, including samples or testing which management will not expect. Okay, which management will not expect that you will include that in your testing, because these are small value samples, because these are very, less risk samples. For example, I told you revenue recognition default risk written in the standard. Management also has the access to these standards. Management can read and can already know that, okay, auditor will consider revenue recognition as a fraud risk. But testing miscellaneous expense or testing other small revenue, very small revenue, where, you know management will think like, okay, they will not look into this area, let's park it here. For example, I'll give you a good example and real example. Okay, what happened is, so there was a, when we got a trial balance, usually there are multiple expenses in trial balance. Okay, so one of such item in the trial balance was other expense or miscellaneous expense. I will talk about the numbers. Turnover of the company was, let's say, 50 CR. Okay, at that particular time, what this might be the number of the turnover, 50 CR. Okay, like they had the debt somewhere around 5 to 6 CR debt. I'm talking about numbers. Net profit of the company was, if I'm not wrong, was around 4 to 5 CR. So good profitability. Okay, everything, a majority of the numbers was running into CRs. Data somewhere around 80, 90 lakhs. Okay, that was something, the range I'm talking about, approximate numbers of that particular entity. Now there was other expense, which is only rupees 5,000 in trial balance. I'm talking about trial balance. Will you go and see other expense based on materiality? Will you go and see other expense based on materiality? Tell me one thing. Yes, no. 99%
No, sir, value is very less.
very less. But when we like, because of the unpredictability, we went and checked this 5,000. It was a net number. We had something odd around, let's say, rupees 10 lakh rupees that was paid to a person which was parked over here. Plus, there was something odd around, some more figures which of the revenue somewhere around something 12 lakh rupees received from a person. So some more transactions. It was a mess in account, and the net number was somewhere around 5,000. This was paid. This was received. So there were some amounts like this. When we inquired, just because of the unpredictability, we were about to know about these transactions. Okay. When we inquired from the management, what are these transactions? Can you explain what is 10 lakh, 12 lakh payment, or what is these payments? And these payments were not direct payments. These were routed through different accounts. For means, there were related parties. It was shown that, okay, related parties had provided key managerial personas on behalf of the company, has paid to someone else. And then the company somehow paid on their behalf. There was circular, some transactions were there. So we came to know these are nothing but the bribes paid to different people to get the work done. And they were parked in this particular account. A lot of things were there in that. I'm just telling you. So this is something an issue. Just because of the unpredictability, we were able to understand there is something, issue in this. Otherwise, most people will ignore 5,000 other expense. But because of the unpredictability, we picked up this account and we went ahead. We did a detailed deep dive. What are the entries in this account? What are the things? And this is something which came out of it. So that is unpredictability, where management will not expect you to see, and you still go ahead and perform that procedures. Because management, if there is a management override of controls, management knows that on the major areas you are going to do something. So they will not keep things in that particular area. They will keep somewhere else where they know that you are not going to do. That's why incorporating unpredictability will help you in uncovering if there is any fraud.
Yes, sir. In that case, we need to materiality level also we need to bring down to check, and also the different sampling also we can see rather than that.
Yes, absolutely correct. Now, these are some specific considerations with respect to the performing the testing. Now, the question comes is that, like I discussed with respect to, okay, these are the specific ones. Now, after that, you need to do or understand the fraud at the assertion level. Remember that whenever we are talking about the fraud, understanding or assessing the fraud and creating a response of the fraud is required to be done at the assertion level. Okay. Anyone, like, what are the assertions at the transaction level? Anyone if can tell me?
Sir, whether it is account is correctly classified, account balance is correctly sitting on the account, and is the right to fit that account classification, and that right and that conformity
Yes, absolutely
disclosures
correct. Yes, absolutely
disclosures.
correct. Yeah. So if I talk about transaction level, so assertions are at account balance level, at transaction level, and at presentation and disclosure level. So if I talk about transaction level, occurrence, completeness, accuracy, cutoff, classification. If I talk about account balance level, I talk about existence, rights and obligations, completion or completeness, valuation, and then at the assertion level, again, occurrence and or right or obligations, completeness, classification, accuracy. So again, we will discuss these assertions again when we will go for the SA 315. Don't worry on that. But fraud is always required to be assessed at the financial statement level plus assertion level both. And when you are creating a response, that response has to be on the both level, financial statement level and the assertion level. Okay. So your risk is at the financial statement plus assertion. Your responses are at the financial level plus assertion level. Clear? Now coming to the specific risk, presumed risk of fraud. Remember, we discussed that there is a presumed risk of fraud. That is by
Yes.
default, there is a fraud. Like there is a risk of fraud, not actual fraud, but there is a risk of fraud. By default, there is a fraud or risk of fraud. So for that, what you will do? Let's say, for example, as of now, we will leave fraud in revenue recognition. We will first focus on the management override of control. So for the management override of control, what you will do?
That presumption of risk of fraud is the revenue recognition and the revenue part, and also that management override controls.
Correct. But what you will do for the management override of control? What specific you will do? I'm saying from day one, consider this as a risk. Now, what you will do?
Generally, they will, in that case, the disclosures and also the accounting estimate and policy, whether there is um, chance for, and there is a complex entry, journal entries, and fictitious entries are there.
Mm-hmm.
And in particularly year close, if a lot of unusual transaction.
Anyone, like what specific testing you are going to do for that?
We will do the substantive, we will get that substantive audit procedure.
Any specific substantive audit procedure you will do this for this fraud risk? Anyone, like what audit procedure you will do for this? Like I am saying, these are the two fraud risks. First, focus on the management override of control. What specific audit procedures you will do? Okay,
We,
fine. Yes, test of details. But again, the question comes is, what you will test to check whether management is, doing this kind of thing or not?
whether all the entries is appropriately entered or not in the system, we will verify it at first. We will check it out.
Okay, all entries. Okay, like can
Yeah,
you give an example of that?
that whenever the complex entries, like in combined way, that four account is debit and five account is credit, like that, and wherever the narration is not clearly updated,
Okay, what else?
and whether the estimate based on the estimation that accounting policies, whether they properly calculated the amount, like depreciation, like actual insurance actuarials, and other estimation wherever is possible, like uh, expense accrual, and particularly in the year end closing, is there any abnormal unusual transaction was entered?
Hmm. Okay.
And we will look at whether there are any adjustment entries done by the company, the entity.
Yes. Yes. Absolutely correct. Yes. Adjustment entries, like inappropriate entries. Very good. What else you will look into? Apart from these, is there anything else you will look into?
We'll look into internal control of the company, like which internal control is deficient, so there are chances of fraud.
Okay, internal controls. Yes, very good. Okay. Yes. Okay. So apart from internal controls, apart from entries, what I will look into? I will look into, first of all, when I talk about management override control, journal entries is an area, okay, that we have discussed. Journal entries, very good. Second is an estimates that management calculates. So at a lot of places, management does estimates. For example, estimate for litigation, estimate for warranty provisions, bad debt provisions. A lot of things are there. What if the management is not keeping the estimates or not calculating the estimates appropriately? Again, management can override that area. Management says, no, no, as per our estimate, we are not going to, get any unfavorable order over here in this litigation. Let's keep, this is the only, what do you say, you know, basically only penalty that we expect. So they will not make any provision. They will show in the contingent liabilities. Estimates is a very good area. Yes or no? Management estimates.
Yes, sir.
So management estimates, journal entries. Apart from that, any other area where management is involved. For example, we have already discussed about the accounting policies. Plus, when we are talking about journal entries, a lot of things are there in the journal entries. When I talk about journal entries, what we can do basically with respect to the journal entries is, I will see, okay, management, can you tell me who passes the journal entries? Who has the access to pass the journal entries? Do you have the approver or maker checker concept? Okay, adjustment made throughout the period, adjustment made at the end of the year, as you correctly said, adjustments that are made at the end of the year to inflate the sales, to inflate the revenue. Or for example, let's say adjustment or journal entries passed on holidays. In a lot of companies there is a maker checker concept and the delegation of authority.
And
So
and SOD also, segregation of duties, they are not.
yes, segregation of duties. uh like, I'm not sure if you guys are aware about delegation of authority concept.
Yes, sir, I am aware about that, sir, delegation. Whenever
So
that
if I
particular,
yeah, so if I talk about a particular delegation of authority, that means in some companies there is a level. For example, if the entry is of 1,000 amount, it can be approved by a manager. If the entry is of 10,000 or 1 lakh rupees, it has to be approved by senior manager. If the entry is of 1 lakh, 1 crore, it has to be approved by CFO. Delegation of authority. So manager can approve entries up to 10,000, 1 lakh rupees. Senior manager can approve the entries up to 1 lakh, 10 lakh rupees. CFO can approve the entries up to 1 crore, 10 crores, or beyond 10 crores, board approval is required. Delegation of authority. So let's say, for example, I have an entry to pass where the entry amount is 1 lakh rupees. Any entry beyond 1 lakh is has to be approved by senior manager. What I did is I divided that entry into two parts, 50,000. Now this entry is below 1 lakh. My manager can approve. With manager, I colluded. I passed these two entries, 50,000, and I created a fake payable which the company will now pay. No senior manager approval is required. So every month, what I'm doing is I'm passing 1, 2, or 3 50,000 entries. I'm bypassing the senior manager's approval. Okay, so delegation of authority was bypassed. Again, fraud risk. Yes or no?
Yes, sir.
So in that particular scenario, you need to understand who passed that entry, what adjustment was passed at the end of the reporting period, or whether this is unusual numbers, entries purposefully bifurcated or splitted into multiple entries to bypass the approval system. These kind of things happen. So while testing the journal entries, you need to think about all these things.
Yes, sir. Also the unauthorized access, sir, which means the weakness in password sharing.
That's why, like, there is a concept called super user concept. That means super user access is a kind of access to the systems that anyone can, that the person who has that access can do anything in the system. That's why they are known as a super user. So whether anyone has that super user access, if yes, for what things that particular person has used that super user access for. For example, audit trail, as you correctly pointed out, Chitra, audit trail. We have to see audit trail for those entries. Now I'll tell you one simple example. Okay. Uh, in companies, I'm giving you actual example. In a particular company, there was a process that first you create a purchase order. In front of that, if you have a purchase order, then only you can book the invoice. Now the system was designed in a such a way that it can automatically allow booking of invoice if there is a purchase order booked. So but you require a lot of approvals to book a purchase order. Fine, not an issue. Okay, what happened in that company is, and there is a real example I'm telling you. Okay, so while booking or for booking the purchase order, you need a lot of approvals based on the level of the amount of purchase order. So if the amount is higher, then you need higher approvals. If the amount is of purchase order is low, then you need lower approvals. So let's say there was a Mr. X. He initiated booking of purchase order of rupees 50,000. Now very low amount. Only his manager, Mr. X manager approval is required. Manager approval required. So manager approved this and it got booked. Fine. Perfectly fine. Not an issue. Now the system is designed in such a way that once you book a purchase order, you can book an invoice in front of that automatically. So system will do automatically matching of purchase order and the invoice, and it will automatically book invoice. Invoice auto book in front of that purchase order. Okay. There was another concept of running balance of PO. That once you book an invoice, the PO balance decreases. Let's say if I auto book an invoice of rupees 25,000, the running balance of that PO will be 25,000 only. Okay. Now the system can only allow booking of 25,000 invoice, not more than that. What that person did is, once he was booking this 25,000 invoice, then after taking another manager approval, he was increasing limit back to rupees 50,000. So adding the limit to the same purchase order that was allowed by the system. Okay. So sorry, that was allowed by the system. He was again, increasing the limit in that purchase order, and he was increasing the limit by 50,000 every time. So it made it to 75,000. Then again he increased the limit. Then he made it to 1 lakh rupees. By this way, he made the limit of that purchase order to 20 lakh rupees. Every day, every week, he was increasing a limit by 50,000. And they were booking invoice in front of that purchase order automatically. And the supplier who was getting payment, he was not supplying anything. It was a service. Basically, it was not related to the goods, it was service. So you cannot track the physical delivery of the goods. It was service based purchase order. Okay. So they were showing, okay, we have received the services from supplier. Supplier was being paid, and these manager and person was getting kickbacks. This is how they were bypassing the system in actual. So when you review, basically you have to see the audit trail. Now, how we came to know? We picked up the purchase order and we checked for the audit trail. And in audit trail, we identified who had made the changes, what changes have been made, how many times the limit has been increased. So when we saw original amount was 50,000 and multiple times the limit were increased, multiple times the PO was changed with an audit trail of every day getting updated, that triggered the point for us to do more research, to do the more investigation. So audit trail, again, very good area. You need to see the audit trail of these adjustments. What was the original amount, when it was increased to what amount, and then what happened to that particular original. Initially they may pass the entry, later on they may do the amendment, and at times if your internal controls are weak, that you don't require approval for the amendments, and you require for the first booking, anyone can use that particular opportunity to do the fraud. Okay, so if I summarize this particular part, you need to test appropriateness of the journal entries and other adjustments. You need to review accounting estimates. Okay, and you need to check about other adjustments which are passed by the management. That is for the risk of management override of control. Now coming for the fraud risk. Fraud risk is already like for revenue recognition, we have already seen that we will do testing with respect to specific considerations and SA 330. So when I talk about fraud in revenue recognition, I will do testing as per SA 330 and as per the specific considerations. However, you have an option to say that this is like when I say risk of fraud in revenue recognition. Now let's consider one another example. So the example is company is property management company. They receive rentals which are fixed as per contract. Okay, only income. This is the only income company has. Now, in this particular example, do you think there is a risk of fraud in revenue recognition?
No, sir. Only one item. There is chances very less.
Very less. So the standard gives me an option for these kind of scenario to say that risk of fraud due to in revenue recognition is not present. Standards gives me an option to say that okay, you say you check if there is a risk of fraud or not. You can go back and you can say I don't feel there is a risk of fraud. You can remove that risk. But for that, you have to document the reason. Document the reason for that. Yes, you can say it is not present. Okay, fraud risk related to revenue recognition is not present. In specific terms, is it rebuttable? That means you are saying that there is no presumed risk. That is possible in revenue recognition only. Okay, in revenue recognition only that is possible because of the certain scenarios and certain type of revenues where you can predict the revenue. So for that, you can go back and say, okay, there is no fraud risk in the revenue recognition. As an auditor, I don't think so there is a fraud risk. You have to document the reason and then you can proceed with the normal risk in revenue recognition. Clear?
Yes, sir.
Any doubts till now? Any doubts? That option is only available in the fraud risk with respect to the revenue recognition, not in management override of controls. Remember that. You don't have an option to say that there is no risk in the management override of controls. The reason because, okay, I'll show you in the standard itself. If you see the wordings of the standard even, okay, and in actual present practical scenario also, irrespective of the auditor's assessment of the risk of management override of controls, so whatever your assessment is, you have to test for it. But in fraud, in revenue recognition, you have a chance to say that it is not fraud risk. Okay. So in fraud risk, the standard says you gives you a chance to talk about, okay, if there is no fraud risk, then you can go back and say, okay, fraud risk is not there, and accordingly, we don't think that any further testing is required in this particular area. So that standard allows you for only and only risk of fraud in revenue recognition, not anywhere else. And if I talk about one more critical thing, like I'll give you, the standard has given examples also for that. Let me show you. Just a minute. So in standard, there is a section called application material. This is kind of an material, or this is kind of explanation material with respect to the standard. So if you, I would recommend, recommend every student, please go through this application material also. You will come to know about why this particular area is there, why this particular requirement is there. So to each and every requirement, they have a application material for your understanding. Okay. Just let me also show you that one. Wait, it's stuck. Screen is stuck. Just give me a minute. Sorry. It's getting stuck. Sorry. Yeah. See here. The presumption that the risk in the fraud and the revenue recognition may be rebutted, that may be cancelled. For example, there is no risk of material misstatement due to fraud relating to revenue recognition where there is a single type of simple revenue transaction. For example, leasehold revenue from a single unit of rental property. So they also give you the example to make you understand more. Standard has everything in it, okay, in the explanation material. But the point is that it gives you an option to cancel or to say that there is no risk of fraud in revenue recognition. But that option is not available in your management override of control. Now coming to the study material. So let's go through what we have discussed. In respect to the response, we discussed about the assignment of the teamwork, so engagement responsibilities, knowledge, assign and supervise the personnel. We discussed that. Assign the teamwork appropriately. We discussed about evaluation and selection of the accounting policies. We discussed about incorporating element of unpredictability. Okay. These three specific considerations we discussed. We discussed about fraud at the assertion level. We have to create the response at the assertion level. We also discussed about the audit procedure responsive to the management override of control, testing the appropriateness of the journal entries, reviewing accounting estimates, okay, and significant transactions that are normal outside the normal course of business. So that is the part of the testing the management override of control. Then at the end, after doing everything, you evaluate the audit evidence, whether there is a risk of fraud, whether there is a fraud or not. So after doing the testing, we have to evaluate the evidence and we have to conclude the conclusion whether we have the sufficient and appropriate audit evidence for opinion or not. That is my objective number 2. Okay, so after doing everything, I will reach to my objective number 2. So you can write objective number 2 at end of this. Okay, so you will reach at the objective number 2. Now, coming to the objective number 3. What was the objective number 3? Can anyone tell me?
To respond appropriately to identified and suspected fraud.
Now, let's say at the end of objective number 2, you came to know there's a fraud. At the end of objective number 2, after doing the testing, after gathering audit evidence, you identified fraud. You identified fraud. What you will do? You will respond to that fraud. Okay, you will respond, yes or no? We cannot leave like, okay, I have identified fraud, let's leave it. We have to do something. That is the whole purpose. Objective number 3. Once we have done the evaluation, we have the evidence, sufficient and appropriate evidence. And if you have identified a fraud, now it's time to respond it. How will you respond? Very good, Geet. Yes. Anyone, how will you respond?
We will report to the first those charged with the government management.
Okay.
There is a protocol. If the amount value is involved more than 1 crore, we need to report to the central government as well. Section 143.
Yes, absolutely correct. Yes. Very good, Geet. Yes. Documentation. So if I talk about responding to the fraud, now see, I have written identified fraud, but you need to consider one more thing over here. Instead of along with the identified fraud, I will add one more term. Suspected and identified fraud. Why suspected? Why suspected?
Suspected means, which means then there is a presumptive is there. The management override control is there, and revenue recognition is there. There is
No,
always.
but why suspected fraud? Let's say I suspect there is a fraud. I have not identified it fully, but I suspect. Why I have to respond to that? That is something already I have done. Audit evidence. I collected audit evidence, and after collecting audit evidence, I have suspicion that suspicion that there is a fraud. Why? Why I'm using this word suspected over here? We have discussed this point. Anyone? So for your reference, why this is there, I am adding one particular point over here. That is, remember we discussed rule 13 section 143 subsection 12, where we discussed about reason to believe.
Yes, sir. Yes, sir. Reason to believe, right?
Remember, reason to believe, expected amount involved or amount expected to involve. Yes or no?
Yes, sir.
Over there, the act provides a responsibility on the auditor to report the fraud when he has a reason to believe, not actually identified, but he has a suspicion. If he suspects there is a fraud, that's why we use the term suspected and identified fraud. Because auditor's responsibility is not only linked to the identified fraud, but it is linked to the suspected fraud also. Section 143, subsection 12, Rule 13.
Yes, sir.
Okay. Over there, the term reason to believe also requires us to report the or respond to the fraud. Now, there are two types of responses to the fraud. One, communication to
Two.
regulatory bodies.
Yes, sir.
Second is the communication to those charged with governance. Okay. Now, in those charged with governance, what you will do, you will communicate to them that management, I have identified fraud, or I suspect there is a fraud. In companies, there is a procedure that you are required to follow. Rule 13, there is a procedure, yes? Rule 13
Yes,
procedure. You seek
yes,
their
sir.
responses.
Yes, sir. We will wait for 45 days. If not turned, we need to report to the central government
Yes.
within.
So you seek their response. You intimate them, okay, management, I have identified fraud. What do you have to say about it? But there is one area, there is one particular scenario where I'll not go to the management, will not communicate to the management about fraud. Which is that area?
So if fraud committed is for an amount less than 1 crore rupees.
No, a area or a scenario where I will not communicate to the management about fraud. Very good, Ayush.
Management overhead control.
Kind of, but when the management is in itself involved in the fraud, or those charged governance are itself involved in the fraud. So I will communicate to those charged with governance and the management unless, or you can say, if like unless they are involved in it.
If the management itself they involved in the fraud, then the situation is not needed to communicate with them.
Yes. If I will communicate at that point in time, they will get alert. They may try to destroy the evidence, hide the tracks. That's why I need to think whether management is involved in this fraud. If yes, then I may skip, I may not communicate to the management, I may communicate to the regulatory bodies.
Straight away.
But
Sir, first things we will discuss with those charged with the governance or management. Then we will get their reply. If they are not responding, then only we will communicate to the regulatory body, right?
yes,
Then we will think about the possibility of withdrawal, unless otherwise there is no objection from the legal.
see what happens is, I'll tell you in practical scenario, it is not something that I will not communicate to the management. See, if there is a fraud, a person from the management might be involved. But in board of the directors, there are independent directors also. There is an audit committee also. If I believe CEO is involved, I may reach out to the audit committee. I may inform them. If I believe someone from the audit committee is there, I may reach out to independent directors. There are other people in the organization at the level of those charges governance. Like, not all will be involved. There are independent directors, there is an audit committee. If CFO is involved, then CEO is over there. executive director, managing director, chairman, a lot of people are there. It is very, very, very rare scenario where each and every those charged with governance is involved. Very rare scenario. Otherwise, 1 or 2 persons are involved in that fraud. Okay, rest or are out of it. You can communicate with the rest. You can discuss with the rest, and then accordingly you can send the response to the regulatory authority. But remember this, that I need to communicate to the management and those charged with governance in line with SA 260 that we will discuss, plus Rule 13, Section 143, subsection 12 of Companies Act. I need to communicate to the management also. I need to communicate to the regulatory bodies also based on this.
Yes, sir. Within 2 days, we need to communicate to them.
Yeah. Okay. Let's say this is the objective number 2. At the end of objective 2, we identified this and everything. Let's say we are not able to conclude. What happened after doing the audit, after getting the audit evidence, we are saying that we are not able to achieve objective 2. This is when you are saying that you achieved the objective number 2. But when you are not able to achieve any objective number 2,
Then we have to withdraw from the engagement if unable to
absolutely,
obtain.
yes, simple. So if you are not able to achieve objective number 2, withdraw from engagement. So objective number 2 at the end, but I will write it down here. If not able to achieve, and when you will be not able to achieve, you are not having the sufficient and appropriate audit evidence. Either management is not ready to provide you the data, or you are not able to get the data, or you are not able to test because of the incomplete because of the incomplete data, or management is creating hurdles, something like that. If you are not able to achieve objective 2, the only option is consider withdrawing from engagement. See, I have
Yes.
written consider withdrawing. I have
Yes, sir.
not written that withdraw immediately. There's a
Yes,
difference
sir.
between considering and withdrawing.
Yes, sir. If it is legally permitted, then we can withdraw.
Yes. Do you know a scenario where you cannot withdraw from the engagement legally?
Yes, sir. When the listed entity, we cannot withdraw immediately, sir.
Yes. So there is a circular, there are rules issued by SEBI for the listed entity with respect to when the auditor can withdraw or when the auditor cannot withdraw. We will discuss that. So there are scenarios where if you want to withdraw, but still you will not be able to, because the SEBI regulations does not permit you in case of listed entities. There are other scenarios also. There could be other scenarios and other laws and regulations. For example, bank audit, or for example, insurance audit. But as of now, the very prominent one is SEBI regulations. Okay, which in case of listed entity, doesn't permit you to withdraw if you have done certain work, if you are trying to withdraw after certain days. We will discuss that particular also. Okay, so consider withdrawing, and if permissible, you withdraw. And let's say, for example, you also consider your responsibility with respect to reporting for withdrawal to relevant authorities. In case of listed entity, you are required to intimate to SEBI, stock exchange, that you are withdrawing. Okay, so company has to intimate to stock exchange. You have to do something, a lot of information is required to be provided, everything, forms are required to be filled. So all these things, consider all these things before withdrawing. Clear?
Yes,
Any
sir.
doubt? See, we'll go to study material back, and where we were, like we discussed the point till, wait. Okay, evaluation of audit evidence. That is your objective number 2. Okay. So we discussed about the objective number 2. If you are able to achieve, fine. If you are not able to achieve, then we need to think of withdrawing. If not able to achieve objective 2. Okay. So these are the scenarios. If you determine that if you want to withdraw, then discuss with the management and those charged with governance for the reason for the withdrawal. You need to check legal requirements. You need to report to the person who made your appointment, regulatory authorities. Okay, and you need to provide the reason for withdrawals if you decide to withdraw. But first you need to consider whether it is appropriate to withdraw and determine the professional and legal responsibilities in case of you want to withdraw. Management representations. So you have to obtain management representations for whatever procedures you will perform. And then remember, communication with management and those charged with governance. If you have identified fraud with respect to objective number 3 that we discussed, communication with regulatory body and enforcement authorities. And the last part is the documentation. See, as I told you in the start itself, documentation will be everywhere. It is not something that it's the one particular standard SA 230 done. Documentation is there from start to end. So everywhere you are required to maintain documentation. This particular part talks about what documentation you are required to maintain. We have discussed it throughout the session also. For example, significant decisions, identify and assess risk of material misstatement, what is the overall response to the assessed risk, nature, timing, and extent of audit procedures, result of the audit procedures with respect to the management override of control, management communications that you are doing with management. If there's you are saying that presumption that the risk of material misstatement due to fraud related to the revenue recognition is not applicable, then the circumstances and the document the reasons that we already discussed. Okay, reasons for why not applicable. So these are certain documentation requirements. So the question is, there is one question. One is with respect to unpredictability. So that means unpredictability does not follow materiality. Yes, absolutely correct. It does not follow materiality. Second is, do we need to consider withdrawal if response failed? Response failed means? Can you explain a bit about this, Ayush? Any other doubt, guys? Any other doubt? Yes, yeah. If you are not able to respond to the risk of material misstatement due to fraud, when you will not be able to respond, see, when I say if I'm not able to respond means I'm not able to perform audit procedures, okay, or I'm not able to design audit procedures. There's a difference. If I have designed the audit procedures, if I have performed the audit procedures, means I have responded, but the outcome of that response, that is getting the sufficient and appropriate audit evidence. When you are not able to get the sufficient and appropriate audit evidence to conclude, at that point in time, you consider to withdraw. Okay. It's not if we are unable to respond, we will be able, see, we have to draft the responses that is there. We have to draft the audit procedures. But at the end, if we identify fraud or if we are in a scenario where we don't have sufficient and appropriate audit evidence, at that point in time, we may decide not to continue with the engagement. Any other doubts?
Sir, I have one doubt. Like one example you explained in which suppose TCWG and management is involved in the fraud. So in that case, we need to report to the regulatory authority. So in this case, amount will not matter, like 1 crore should be or less only.
So who is involved into the fraud?
Management and TCWG.
Whole group is involved.
Yes, sir.
See, in that particular case, uh, reporting to the management is not appropriate. Okay, so you should not report to management in that particular scenario. In that particular scenario, it is advisable to report to the central government. Now the question comes is, that's a very gray area, I'll tell you appropriately. Reason why is because law doesn't require you to report. Okay, if law doesn't require you to report and still if you go and report, the question comes on that whether are you breaching the confidentiality, are you doing something which is against the confidentiality.
Sir, in that case, can we reach out the professional body such as ICAI in our case before
No,
going to central government?
no. In that particular scenario, you can take a reference of SA 240, which requires you not to involve management when they are involved into the fraud, and you can directly report to the regulatory body.
See, if the appointment is given by the regulatory body, then definitely we can go to them. When the appointment is given to statutory auditor by the member, then we have to report to the member only. That audit report will go to the members. See,
See,
when
audit
the
report will go to the members, but when it talks about the reporting to the, let's say amount is less than 1 CR,
yeah,
Rule
that's
13
okay.
says you that you have to communicate to the management.
That when the entire management is involved in the fraud, in that case, the value is less than 1 crore. Is that appropriate? Directly going and reporting to the central government is appropriate?
Yes, because SA 260, SA 240 at the time says you that if management is involved, in that case, you may choose not to report to the management and you may report to the relevant regulatory authority.
Oh, okay, okay. But you rightly pointed out also, is that any breach of confidentiality in this case?
See, that is a very gray area. That's why I'm appropriately saying it. It's a very gray area, very rare case scenario. But in that particular scenario, you can say the law, that is your SA 240, requires you to not to report to the management because they are involved in it. So if I talk about SA 240, it specifically says, okay, unless those charged with governance are involved in managing the entity, if auditor has identified or suspected fraud involving management, employees, or otherwise where the fraud results in a mismanagement of financial statement, auditor shall communicate these matters to those charged with governance on timely basis.
Oh,
So
okay.
unless they are involved in it.
Okay, okay, right, sir. When the definition also is talk about who is those charged with governance, which means they do the strategic decision, and they are the main obligation for that accountability of the particular company. They are the
See, hmm.
TGW.
But
They
in real
themselves.
scenario, if I talk about in real scenario, you hardly there will be a scenario where you can say that in order to say that all the those charges governance are involved, you need to have that detail in your hand. You need to have that detail that all the management, all the those charges governance people are involved in this fraud. They know about it and they have done with intention. Because if you see the definition of fraud, okay, I'll show you the definition of fraud itself. Take company sector, any particular act, or even if you take this standard. Wait,
So in this standard itself, they given the what is the meaning of fraud.
it's an intentional act. An intentional act. That means you have to prove the intention that everyone knew about it and intentionally they have done this fraud. Very rare scenario. Very, very rare scenario.
Right, sir.
Any other doubts? No? Okay. If no further doubts, this is your essay 240 that we have discussed. What I want you guys to do. For the next lecture, prepare 250, 260, 265. We'll take up all these three because 250, 260 and 65 very are small. They are straightforward. Number two, we will solve questions on 240. Plus, read the chapter, study material, what we have discussed today. If you are not read, go through this essay 240 in your study material. It is very important. So complete the reading of the study material. Try to solve some questions from the study material itself. The questions we are going to take are different than the questions we have in the study material. So you have to practice the questions which are there in the study material for essay 240. Complete that. Okay. Read the chapter for today's lecture and for tomorrow, for next lecture on Wednesday. Complete the practice of essay 240. And in the next session, ask the doubts if you have any. That is what is expected from you guys. Okay?
Okay, sir. Thank you so much, sir, for the detailed explanation today.
Okay, guys. Thank you, guys. Thank you for participating in today's lecture. I will see you next.
Okay,
Thank
sir.
you.
Thank you.
Thank you, sir.
Thank you.
Thank you so much, sir.
Yes.